What we haven't been is normal over the last 5 years or so. So pre-COVID, prior to 2019, that was more of a functioning housing market. And remember that markets are always seeking equilibrium, and it looks like that's kind of what we're headed back towards. Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our July market update. So right now in Greater Phoenix, we are just above 19,000 active listings on the market, which is actually down over the last couple of months. We're starting to see the end of our seasonality, or actually just continuing of our seasonality, where we typically see a pullback in the summertime, where more homes are coming off the market and less homes are getting listed. So it hits triple digits here. People take vacations. We see all our winter visitors leave. The population shrinks a little bit in Phoenix. And so we just take kind of a breather in the months of July and August. Typically, we'll see a little bit of an uptick in listing activity in that early fall, and then it dies off again over the holidays. What we haven't had over the last few years is seasonality. So it looks like the market's just getting back into the swing of things, and we're just getting right back into the seasonality that we see every single year with Phoenix real estate. So the big hot button topic is mortgage rates. There is a battle happening between the administration and the Fed Chair Jerome Powell, but there's also starting to be a little bit of a civil war brewing between different Fed chairs within operating under Jerome Powell. Right? So there's Fed chairs from across the country, and they vote on what to do with rates, and then it's decided upon by Jerome Powell. So there's more and more of a push to start loosening up, if you will, on rates, and to start actually lowering interest rates, the Fed fund rate, which would have a direct impact on mortgage rates as well. So I think that we are going to be getting closer and closer, and I feel like I've been saying this for years, but finally getting closer to slightly lower mortgage rates, something getting down into the sixes and maybe even high fives. Jerome Powell is out regardless in May of 2026. And what we know about this administration is that they typically put people in there that toe the line and do what the administration wants. Trump has been extremely boisterous in what he wants to see, and he wants to see the Fed funds rate be dropped by 2.5 to 3 percentage points. That would drop mortgage rates pretty dramatically if that were to happen. So as we progress through the end of this year, and we're already over halfway through it, I think that we are going to start to see those mortgage rates finally start to come down and get out of this 6% range that we've been in. What we're not going to see is 2 or 3% again. That happened because of massive government stimulation. The economy is not in a situation where that needs to be done. So if you're somebody that's on the sidelines waiting for 2, 3, or even 4%, you are a far cry away from that. And it's better to, act when you're ready on a monthly payment basis rather than what interest rates are going to do in general. But again, I do think that we are closer to the end of this higher rate environment, and we're going to probably settle something into low sixes, high fives come later this year and early 2026. So there's a lot happening in the world, so a lot of geopolitical unstableness. There's a potential hot war taking place in the Middle East. The job market here in the United States is softening, hasn't broken yet. We haven't really seen a jump in unemployment, but Jerome Powell even came out in his last Fed meeting and stated that if you're out hunting for a job, it's very difficult right now. So they're well aware that the job market is softening and not as robust as it once was. What is happening in the Middle East is probably going to have not that huge of an impact on the housing market or interest rates. Typically, when we see these types of things happen, there's a flee to safety where people tend to buy U.S. bonds. And when people buy more U.S. bonds, those rates actually come down. So if that were to happen, we might actually see mortgage rates come down sooner rather than later. But based on what's currently happening today, and we recorded this in late June, there's not really that big of an impact on markets right now. It's been a very tepid response. So even the price of oil hasn't shot up. The stock market is still, just a couple percentage points off of all-time highs. I think the NASDAQ just went above all-time highs. So, our economy, based on what's happening over there, is not really being impacted, at least in the short term. I think things could change if we get pulled into more of a conflict, but as of this recording we are not, and so the markets are also predicting that we're not. So things are just very mild right now. So buyers right now can expect very favorable conditions for buying a home. I have had multiple instances just this month where buyers have made, upon my recommendation, aggressive offers on homes, not accepted by the seller. We say thanks, we're going to continue to look, and those sellers come crawling back to us within a couple of days saying, we've had an opportunity to rethink it. If you're still interested, we'd like to move forward. So what I always tell, buyers and sellers are the ones that win negotiations, are the ones that are willing to walk away. And as a buyer, you should be willing to walk away from deals right now if it doesn't make sense and the seller's not willing to play ball, because there are other options out there for you. And sometimes you can see those sellers come to the realization that moving forward with you and your lower offer is better than continuing to try to market the home and find somebody that might being the key word, pay a higher price with less in concessions. So as a buyer, you can expect to be able to negotiate on purchase price. You should be able to get almost all, if not all, of your closing costs covered, including realtor fees that are part of buyer's costs now. So that's for rate buy downs, lender, title, and realtor fees completely covered by the seller. And if the seller's not willing to do that, honestly, I would continue to look and find a different property. So buyers, again, you have the advantage in this market. Take advantage of that now while you can. Historically, our buyers markets, especially here in Phoenix, tend to be relatively short. And we're not that far away in terms of interest rates from that potentially pivoting and going back in favor of sellers. You can expect longer days on market. You need to be willing to negotiate, and that does not mean pricing high to negotiate down. Buyers know this trick, and they're just going to skip your house altogether. So list your home accurately, but be prepared to have to give concessions in order to sell your home in the short term. If you're somebody that does not want to do those things and don't have to move, then maybe waiting until the market shifts might be more advantageous. However, remember, if you are selling maybe a lower priced home and you have to take a 3 to 5%, 10% haircut on what you would like to take, go and get that same haircut on the higher priced home, right? If you're selling a $400,000 home, but you're buying a $600,000 home on the other side, if you have to sell it for 5% less on your 400, get the 5% less on the 600, and you're actually making money, right? So it is a great time to sell your lower priced home to upgrade into a higher priced home. These two transactions are not isolated or compartmentalized. They are happening within the same market. So it is more advantageous to sell your cheaper home in this market and upgrade into a higher priced home, because you can get that same savings, and it's, 5% of 600 is greater than 5% of 400. So again, you're making money by selling your lower priced home to upgrade into a higher priced home. So always bear that in mind when you're selling in a buyer's market. You turn into a buyer in a buyer's market. If you have any questions on the housing market, where we're headed, where we are today, please leave them in the comments below. Don't forget to give a like and subscribe, and I will see you next month. I think I said the word seasonality probably 8 times. Yeah. In terms of the active listings on the market, homes coming off the market, and just, I'm trying not to say the word seasonality.
Good.
That was probably better.
Yeah.
Yeah. Seasonality.